Today's markets are surging on the back of dramatic move from United States President Donald Trump. In a statement posted on Truth Social, Trump announced a 90-day pause on his proposed reciprocal tariffs for countries that have not retaliated against US trade measures. The announcement triggered a massive rally on Wall Street. S&P 500 jumped 8%. NASDAQ soared more than 10%. On track for the best days in years. Best days in years. You'd say it was incredible if we hadn't seen the last few weeks and all of the crazy stuff that's been happening in the world. Tech stocks led the charge, of course, with companies like Apple, NVDA, AMD posting double-digit gains. Why the market reaction? Because this pause signals a temporary retreat from the full-scale trade war. Investors spooked by the sharp tariffs unveiled last week are now recalibrating their expectations. We'll be diving into the S&P 500 charts and Bitcoin, various stocks as we go today. It's a live request show as well, folks, so get your requests in and we will do technical analysis on your chart. Folks, do not worry about buffering. We will be working just fine. Just fine. And NFS stream does not work for some reason. I'll upload it as a video separately anyway, so don't worry about that. So we spoke about the key levels to look at for last week on the charts. We'll be bringing that up in today's show. Absolutely, of course. Here we have the Bitcoin chart, and you can see there's some great TA there lined up for today's show to talk about. We've also got SPX that we'll be talking about as well, and there has been a couple of dates left for us to take a look at. There's some flashes that do remain down below. I think we can kind of celebrate the large retracement that's happened today and look towards this flash as a potential target up there at 6,000. Sorry, 5,600. And 68, and we have of course got a couple of big dates to look out for as well coming up. So the de minimis exemption ends here, we can talk about that, and the 90-day tariff exemption ends there as well. So we've got a couple of key dates to look out for coming up in the future. We can talk about them in today's show. Thanks very much for everybody supporting the channel, hitting like and subscribing. It's always appreciated, and I can see that people are chatting away in the chat box. It's very good to have you here. And we have a goal this evening. So we're going to have a big tea party if we can reach that goal. A tea party, that's right, a tariff party. Couldn't write the word tariff in my goal though on YouTube. It just didn't let me. It's a banned word. But we're going to have a party and talk about all of the stuff in today's show if we can reach that goal. Now, Goldman Sachs have even walked back its recession call. It was talking about recently because Goldman Sachs said that we were going into recession, and it's like, oh, maybe we're not going to go into recession, reducing the probability from 65% saying yes to 45% saying maybe not in a matter of hours. But make no mistake, the pause applies only to countries that haven't retaliated, which does open up a bit of a kind of grey area around about Europe, who announced tariff retaliation, but did it kind of in their morning, and then that was when USA was not ready to respond with this change. So maybe we'll be seeing quick walkbacks on that this evening and everything going back to 10%, other than for China. China is facing a fresh wave of tariffs. It's been raised to 125%. They're tariffing back to the US 84%, which is really damaging for the soy farmers in the US. And US soy farmers and other big grain farmers have had a hard time, over recent past. They have had a bit of recovery in the last couple of years, but if you were to talk to them, they would tell you that ever since the first trade war with China, it has been tough for soy farmers in the USA. Well, that's going to be tough times again with China importing an awful lot of feed for livestock from the US. Other things being discussed, of course, like banning poultry exports and all this sort of stuff. And the US is escalated again by moving the tariff level up to 125%. So in other words, Trump has doubled down on his stance towards Beijing while opening up a diplomatic lane for others. So you kind of get a sort of good cop, bad cop, or a good boy, bad boy thing. Excellent. Cheers, Queenie Janine, for chipping in there. And we'll take a look at that, get my opinion on RKT at some point in today's show. So thanks for the donation, and everybody else who's donating. You support the channel. Thanks so much. It really does help. It's fantastic. And we really appreciate it here when people like enjoy the show and show that back with the donations and support. It's fantastic. Thanks so much. So we've opened up, we're seeing opening up lanes of, you know, diplomacy, negotiations for trade talks, getting things sorted with most countries. And that's kind of one of the big things that has been talked about in today's news. So we have, for instance, Besant, who are saying that the sort of giving that sort of good the maybe a bit like a teacher, like a high school or primary school, kind of that sort of vibe, the way he's talking with the media here. Just play him real quick.
Successful negotiating strategy that President Trump implemented a week ago today. It has brought more than 75 countries forward to negotiate. It took great courage for him to stay the course until this moment. And what we have ended up with here, as everyone a week ago, they're in this very spot, do not retaliate and you will be rewarded. So every country in the world who wants to come and negotiate, we are willing to hear you. We're going to go down to a 10% baseline tariff for them, and China will be raised to 125 due to their insistence on escalation.
So you see what I mean there? There's kind of a little bit of that kind of school teacher vibe. What's the teacher in The Simpsons called? Kind of reminds me a bit of that, sort of, in a way. You've been good boys, so you are getting a 10% tariff. You've been bad boys, you are getting 125%. Be more like those guys, be less like those guys. So we can see the rotation, the wheels are spinning on this one. But it's not got to a landing spot just yet. Treasury yields have also been kind of impacted, right? We've seen a sharp movement there. 2-year yields jumped 22 basis points. The 10-year hovered near 4.4% before easing slightly after a strong government bond auction, which is good because the anticipation coming into them was not so good. The last 2 government bond auctions has been a bit weak now, and so that was good, right? Analysts describe today's Treasury auction as one of the most closely watched in years, and foreign buyers stepped back in heavily. So there we go. That's a bit of confidence back in the USA, because it has really impacted things. The actually even got the BBC News can maybe, if I get this right, sum it up for us. Somewhere around about here.
Causing them.
There's a chat about bonds. They're going to
force going around.
Look. They'll not. It's too much. The yields on bonds going up and demand for bonds dropping, reducing the price of the bond itself versus the maturity on the bond, makes the yield go higher, which is because the price of the bond is slipping. And that's because demand for them has slipped, and that was confidence in foreign countries from buying US bonds, and it creates a bit of a problem if you're looking at the debt ceiling in June coming up and the price of that debt going way up. So it's really important to get the price of that debt to be as low as possible, and that involves having confidence in the markets. We can explore US 2-year, 10-year bonds in today's show. If you want to take a look at yields and so on like that, you'd have to let me know in the comments. You could use the goal thing if you want to get directly in touch with me. That's a pretty fun way to do it. So there was several days of panic and the markets kind of stabilized a wee bit. And a key metric of the US credit risk is high yield default swaps. And they plunged more than 14%, which is the sharpest drop since the COVID crash in April 2020. So what's actually happening here, and it's less about tariffs, right? And actually the story which is happening, and we've discussed this in the Discord, there's a good chat about it in the news channel. So go take a look at the news channel and you can see us breaking down some of those figures about how much was being made by the US on tariffs. recently, because there was some misleading information out there, kind of confusing information. As it stands currently, with 125% tariff on Chinese goods, if the rates of imports stayed the same, and there was roughly 40 billion imported every month in dollars worth of Chinese goods, that would be, you know, 50 billion dollars coming in into tariff revenue, which is just mind-blowing. It'd be great if he would put some of that money into buying crypto for the sovereign fund, wouldn't it? So that's one of the things I was thinking about. Go on, Trump, do that. That'd be cool. There is kind of some debate about whether that figure is true or not, though, because there is this de minimis exemption, which you saw on the chart there a moment ago, when that ends, and that is an $800 cutoff point. So all the stuff you buy from Temu, if it's a package that's under $800 coming through to you, at the minute that just flies through customs and doesn't incur any tariff, which is really great. And millions and millions of packages arrive every day, millions of them. So if there was a tariff put on there on all of those packages, by removing that de minimis exemption, it would mean that hundreds of millions of packages would just clog up the warehouses right at the borders, all the docks in the US, as they wait to send out the letter to the person at the house who ordered it, saying, this is $50 you bought from Temu, you owe us 100 and whatever the tariff ends up being, right? It's 125% today, could be 200% come this time next week. So, you buy $50, you owe them over $100 in tax, and you're thinking, do I pay this, or you owe them $50 in tax, $60, whatever it happens to be. Do you pay it, or do you just make them send it back? It's a big decision for somebody who's bought like pencil sharpeners and soap dispensers from Temu for $50, and they're thinking, do I spend an extra more than $50 just to get that package, or do I just let them send it back and I'll order it next year if I actually want it? So that causes so many backlogs and delays and everything. So there's this kind of minimum kind of critical capacity that you need, and there is a bit of an issue there. How are they going to handle that? How are they going to handle that capacity storage cost to just buffer? Anyway, that problem comes in May the 2nd. It's not been bridged quite yet. And the story here has actually got another entire element to this, which is not being discussed. It can't really be discussed because the only people who really understand it are out there in positions of power, that if they were to discuss it, it would have an effect on confidence. So then you rely on like YouTube and stuff like that. And I'm the only one on YouTube that kind of understands this and talks about it. So you can hear it here, and thankfully, in a sense, my audience is small enough that I'm not going to actually influence confidence by talking about these things. But this is kind of really what's going on, and it's actually there's this quiet mechanic of confidence. It's not just confidence isn't just an on-off switch. There's a mechanic and a process, kind of a system of confidence. And what spooked the markets was not just the tariffs themselves, but what they represented, which is a possible unraveling of this unspoken agreement that underpins the global order. Trade deficits, US debt, foreign investment, and dollar dominance all hang on one quiet truth. The US absorbs global surpluses and offers liquidity, security, and access in return. And a lot of this trade deficit that exists on paper in terms of, you buy our ethanol, we buy your ethanol, doesn't necessarily add up to the way that we know the world works and why there's boats protecting the South Pacific and so on. The threat right now to Taiwan is escalating all the time as the fabric of security fabric breaks down in the world. And the Apple, who've had a massive rise today in their stock price as it happens as well. There's the Apple chart there. Apple import from Taiwan to China the chips that they use in their phones. and then from China to America, they assembled phone. And they're kind of exposed in a lot of ways because the reporting that they do goes back to China as kind of their origin country, but they actually could report it slightly differently, pay a lower tariff by reporting it fully, because they actually get the silicone made in Taiwan and get a slightly lower but the still overall the way that this is looking, it's like that it's going to pretty much double iPhone prices, and having a bit of a pause here on some of these other countries means that now Apple can kind of kick some of that tariff back to an earlier origin country, even though it goes through China, and that reduces their exposure to tariffs. And thank goodness for Apple, because it was really exposed, if it just to the Taiwan tariff alone. But Apple is an American company, right? And what's actually happened with Apple, and a lot of people don't understand what globalization is, right? So globalization happened kind of like this: Apple didn't have an iPhone, and they looked around and they thought, well, we could make an iPhone here in America and try and sell it to people, but it would be really expensive, and besides, the jobs to make them are crap jobs. And what we want to do instead is to make them somewhere like in China, but we want to do it in the way that like Donald Trump talks about the wall that was going to be built in Mexico. But there's a difference. Like, Apple can actually execute and deliver on this, and this is the story of American success and why America dominates the world. And this is quite an important story, right? And it's seen quite easily through the lens of Apple. So just if you take a second to listen, it'll kind of explain. The Apple thought, right, we could do that, and it would cost us this much money to make them, and then we would sell them to this market here in America, and it'd be a sort of janky process, the way that people kind of imagine business, the way it would have worked 100 years ago. And it wouldn't have made as much money as doing it through their amazing idea of, how about we make some other people build the phones for us, mine the raw materials for them, buy the the raw materials, process the raw materials, change it into the hardware, assemble the hardware, make it into a final product, do all of that for us so we don't have to get our hands dirty at all. And then we will then sell it back to those same people who do that job for us. So that they've paid for the raw materials, they've paid for the assembly, and then we will take the rest of it and we'll sell that. So we get them for free. The people who built them and had the crap jobs paid for it. Where the resources to make them came from was paid by those people who dug it out of the ground themselves, and we're selling the phone over there, and we're paying our taxes in America. And America at that point, when Apple was doing that, planted the flag right on the top of capitalism and said, we dominate and we rule the world. So much so that Apple's got to the point where its balance sheet is as big as a large nation, not a small nation, as big as a large nation. So much so, in fact, that if you're to split the country up into chunks and say, right, America is no more, it's not even states anymore, it's like owned by corporations, you could have Apple like owning California. It's just that big, it's just that worth that much. It's incredible. And that is an example of globalization and America dominating the world. They went to China and they made them dig up the raw materials and the lithium for the batteries. Then they made them assemble them in the factories. And then they became the most popular phone that was sold in China. So that they made so much money from selling phones in China that it paid for the parts and assembly of those phones to be done by somebody else and dug up in some other country and then sent over to be sold to people who've got nice jobs. They don't work in iPhone assembly plants and don't work in lithium mines, right? Good jobs, and they can sell it to them for less money than it would have cost had they got it built in the same country. What a scam. What an amazing scam. How did America get to be able to do that where China was paying for the process in the way that the wall should have been paid for by Mexico? How did it do it? It did it through amazing American globalist capitalism, like rampant, ruthless, exploitative capitalism at its finest, and that is being tested. And of course, the sort of news today has helped somewhat with Apple's stock price, right? rightly so. What, genius that it was to do that. Incredible, right? And that's a very quiet conversation, right? It's a very quiet conversation. And this is what I mean about the unspoken agreements. I mean, who speaks about the agreement there to do that? Nobody speaks about that agreement. And then creates a trade deficit, and then one of the parts of this trade deficit that you've got, and the money that you're making from this trade deficit, and is then that you go and protect the South Pacific so that Taiwan doesn't get invaded by China. Then China looks at what's happening and is thinking to itself, hold on a minute, we're paying to assemble the phones and buy the materials and bring them over from Taiwan through this global supply chain. And we need access to these. So America got so powerful that a couple of years ago, Biden was able to put a tax on semiconductors being made in Taiwan, which actually, by the way, calls itself China, right? And speaks Chinese, and is an island right next to China, where whenever China went communist, it kind of took over the mainland China, and the kind of government escaped over to there. So America has this kind of, puts its arm around it and protects it, and puts boats around it and says, look, you can send your stuff around the world, and it sends semiconductors. So NVIDIA makes its semiconductors in Taiwan. Apple makes its semiconductors in Taiwan. Taiwan, that's right next to China. That everybody's kind of accepted, because it's kind of okay to do what's happening in various areas and war zones in the world, that China is just going to take over Taiwan. Because there's a silent agreement, right, that through the dominance of the US security forces around Taiwan, that Apple and NVIDIA, which are the two make up a huge percentage of the value of US economy in total, actually get their products from an island off the coast of a communist country that broke away from the commies to make semiconductors as part of globalism. And China's just plans to just take it off the hands, which is a real big threat. And they're able to do it, and people aren't talking about it. And the reason they're not talking about it in these terms, and you can see it's so clear from what I'm saying, how incredibly important it is, and how the American model works so strongly, that Biden was able to get tariffs on a foreign country exporting stuff to another foreign country, even though the island is right there and the Chinese military are pointing their guns at them. And they're like, well, they still have to pay more money for those things that come from China to China because of us, because we own this stuff. That's the American dominance was so strong. It's able to get that tariff put in there between those two. But now it's American citizens paying tariffs on foreign goods. It's kind of all flipped, right? And dollar dominance obviously is hugely important, and the American absorbing the global surpluses by buying up these products from China through its being the reserve currency, the privilege that it has, is supported by foreign countries buying its bonds, which is why when the bonds went up today, and why I was pointing out, well, that's good that there's some confidence in the US system, and the US is really seen in those bonds, right? And if it drops down, the confidence drops down, then America will be shooting its own foot, because then its cost of borrowing is going to go up and the debt ceiling is going to be hit in June. So that's the current situation right now. And this agreement, which is in place about peace and everything else, is part of it. So Taiwan has a sort of deficit with America in terms of its trade. However, it imports so much American security, and it doesn't pay for it in dollars, but it's about to be invaded, so that the companies, Apple and NVIDIA, that make its chips there, will be essentially controlled by China. And the solution to it isn't to put tariffs on Chinese goods to force Apple to try and move its factories from Taiwan over to America. We're talking about the real world where we live in, where Taiwan basically only exists because of America in the first place, which is what this silent agreement is in the first place. And it is actually what this trade deficit really actually is. And, in exchange for people buying up, for people buying its bonds, America buys up products and offers liquidity and security and access. And that's how that's what the trade deal is. So the Trump tariffs have tested this balance, right? And it's, these things need to be tested from time to time, even just to know that they're still working properly. So, it's not necessarily a bad thing, but but it has tested that balance. And today's pause, I think, suggests that there's some recognition, at least temporarily, that markets, they're built on stability. And the world still expects the US to be the anchor and not the disruptor. And uncertainty remains, right? So the 90-day clock is now ticking. Negotiations will begin. So will speculation. Right? Is this a strategic reset or just a delay before another escalation? What happens this time next week? Tell me in the comments on this video, by the way, because I want to know what your thoughts are, and we'll talk about it down there. For now, though, investors are breathing a sigh of relief, but the system Trump is challenging wasn't built on short-term tactics, right? It was built on trust, trade flows, implicit contrast between surplus exporters and the American consumer economy. And whether that contract survives the next 90 days may determine the direction of markets and the global order for years to come. And that's where we are right now, by the way. That's the economic situation. If you want to read more about it, there's, of course, an awful lot in the Discord there for us. I'm seeing that we've had 5 contributions towards the goal this evening. Just scrolling back through the chat there to catch up with them, we can see that one of them was from Disco Biscuits. Big action today. Let's go LPSN. Excellent. Thanks very much for the support, pal. The previous one was starting watching 2 weeks ago and loving the stream. Rocky's pushing for that tea party. Any thoughts on LPSN? We'll take a look at that today, Monty. Okay, cool. Appreciate that. Good to see old fans, long-term fans, new fans, old fans in the chat there. We've got K King working crazy hours, spending time watching stock and crypto markets, chatting with people in the audience there. It's good to see you. Person's watched the channel for the last 5 years. It's good to have people around like that. Dragonfly, cheers for the $5, mate. That's appreciated. Let's just see if I missed any others. Yeah, we've got the one from RKT. So I think let's take a dive into charts, news, stuff like that. Take a look at the screen, take my face off the screen for a minute or two. So we've talked about Besant already. This is the kind of the headline, I suppose, here. The lack of tariff retaliation will be rewarded. That's what his story was there. Tariffs on steel, aluminium, and automobiles are unchanged, White House official says, because we have got some elements of this which are kind of the more old school approach to tariffs, where you're protecting specific industries as opposed to wholesale tariffs across the board. And those are the specific ones that are looking to be protected. Talking about steel, by the way, do we have? Where's look? I mean, we've got this happening here. This is very, very, very Ayn Rand. Very Ayn Rand right here. You can imagine this. This is, what would it be though? British Steel? Is it more like Associated Steel or Rearden Steel? If you know what I'm talking about. If you know what I'm talking about, let me know in the comments down below. What would you say? British Steel is more like Associated Steel Orin, or is it Rearden Steel? Anyway, it's preparing to idle a couple of its things, and you can see how these are real big deals. And that's obviously Britain could impose a big tariff on foreign owned steel. Just one little kind of tiny little point here I want to kind of bring up is, if you can see that right in just there, it says Chinese owned steel maker. Now this is like if China imposed a tariff on iPhones, because they like the fact that there's people in there making iPhones and giving them people some jobs, but they're looking at it and they're thinking, an American company owns that people, they're making all the money, we're doing all the work, and they're making all the money. So when you see this story here and you're thinking, oh, why has Britain got this thing that's owned by China in there? And of course they need to protect these things or these industries and whatever, but why are they letting that happen? Good question to begin with. But also, if you're able to ask that question, you already understand the answer to why Apple achieved such a great thing and why these tariffs from Trump are threatening the American business model. So you actually are really up to speed if you understand why that might be a concern. Nevertheless, these sorts of industries are not necessarily actually about necessarily even making that much profit a lot of the time. It's about jobs and things and access, of course, as well, kind of security with regards to being able to get access to things, and quality as well. So these are big things that are happening Britain might nationalize that, and that's the other piece of news. If I go off this page, maybe this BBC will have it as a headline here somewhere. There we go. So talks to save British steel reach a crunch point, and I think this really does tie back to the tariff story, but it isn't because of American tariffs, right? This isn't because of American tariffs. This is just to kind of echo out to a broader audience that these sorts of things are happening around the world, and it does create big conversations which might result in things like industries having to be nationalized. If you put a tariff on something, or if you nationalize it, or whatever you step in, this money is coming from the people essentially to do it one way or another. If it's through some tax thing, or you're supporting it one way, or so this is kind of a conversation that's happening right now, and so it's important stuff. There's lots of other news as well. If people want to talk about the news, let me know in the chat box. I am reading the comments. It's good to see that people are in there having a good time. Thanks for joining us. We see David V in the chat there. What a day. Hey kitties, hey vis-a-vis, and all the rest of it. Love the way that people are so friendly with each other in the chat box. If you do have any specific comments and you want to reach out to me, then help support the goal that we have. We're going to have a tea party. It's a tariff party. If we get to the target on there. There's a question right now with regards to whether or not we will see this operate perhaps like a flag of some sort. The recent price action here on Apple may operate somewhat like a flag. Why am I saying that? Because we could have done the same analysis here on Bitcoin if I had spoken quicker at the start of my show. This was my intention, but as you can see, it's kind of front run my plans for the show. If we do see continuation breaking past prior highs at 83,000, then that would be great. That would be great. I would like to just put out the warning that there is, of course, a very good chance we come back down and test some of these dotted lines. Just pop that down there. You can see this would be effectively like a retest of this dotted line. And you might be wondering what that is all about. And the answer is, if you see in my 4-hour time frame here, and you just take a look at the volatility channels, the volatility bands that I talk about here in the show. Some people might kind of poo-poo the idea or whatever, but they are volatility. Excuse me. They're volatility bands, right? And they've truly worked for a long time. And we can see that when the prices did drop down last week and push down to these lows again, they tested off the purple box. If you've been watching the show for a while, you know what that is. If you're not, then ask me in the chat and we can examine what those are all about. They're significant levels though. And then it pushed back up, and as you can see, it bounced off of the volatility band as expected, putting a bit of a double bottom here, and now it has broken a bit higher. But if it did come back down and test this, that would be, of course, the anticipated result if it didn't get followed through. Why? Because when we look at these things, we generally speaking say if it can't achieve a move to one, it's going to move to the other, right? And we see that so often. If you just want to take a kind of look at a couple of kind of glances back here, where we pushed down, came up, managed to sustain prices above that zone, and we pushed on up, fantastic, came back down again, and it takes us right there to the penny and off of again, to the penny, back off. You can see just how amazing that is. It's been like this for years on the channel, by the way, folks. If you haven't subscribed, you're missing out, because we know everything that's happening on the charts way in advance. Anyway, the point being, so long as prices stay up above $80,000, I'm pretty bullish on crypto, but the thing is, the fundamentals could change rapidly on all of this. There's a question to be had out there with regards to the others. Again, another set of these volatility bands working so gosh, amazing. Anyway, yeah, another question to be asked about the others. It's reached a point here where it's again at another one of these volatility band zones. So if this actually is able to push through, fantastic. This is an index of altcoins, by the way. That's what that is. That'd be great. But the question does, of course, rotate back around again towards whether or not this upward trend that Bitcoin dominance has had for some time. If I zoom on out, you can see this upward trend, upward trend. If it's going to break at some point, if it does, I'm looking for it to pull back down towards 51. Ideally, in a scenario where Bitcoin is, of course, trending towards the top side, so that there is actually value, wealth accrual across the market caps of all of these altcoins, and it makes for a bit of kind of great trading and investing period. So I'm looking to see if that can happen in a market that's bullish, but this has been a downward trend, and at a pivot point previously around about this 83 area, it does represent a threat towards the potential for this to pull back down to test $80,000 again. With markets closed in America, you can look at pre-market on stocks. One of the things that you can talk about, of course, as we have done a fair bit recently, is ES is in the game. And we have we speculated about whether or not the prices would be able to stay up above these zones, right? And they would have. Technical analysis, everything was sound. It was sound, right? They would have. And then this news story changed. We were very capable in our analysis, though, and managed to find the zone at which you would no longer want to be in that trade. There was a discussion to be had, as you can see, the 4-hour time frame, when that last week, if we're just reviewing last week's show at this point, when this conversation happened, this doji was being put on the on there, and we're asking whether it was broken or not. It wasn't at the time, but that was what was going to happen. I think we were fairly clear about that. And then prices then dropped on down to, where did they drop on down to, and could it have been in any way predicted? And then, of course, did we make that predictions ourselves? Well, we did. We did, and we did very well with it. We talked about movements down below these lows over here, taking price into testing off of these areas, such as this price point and this price point. And we said that you would have to manage your trade by cutting it off there. So all of this trading last week was fantastic and outlined in advance on the show. The crucial thing with this, obviously, is that we're back at that point again, that kind of cut-off point here. If we can change it, great. If we suffer again, then not so great. Whenever you're at something in the market like that, you could call it a pivot in the market. It's a pivot point. It's a point of inflection. It's an area where one perception could flip to another. The things that are, of course, are coming up, as I said, I would mention them again in the show, are the de minimis exemption. When that gets removed is May the 2nd. Something to be aware of. And of course, if we assume that the tariff thing is from today, I might have got this one day wrong. It might be the 9th of July it ends on. I'll have to check later. Plenty of time between now and July to figure that out. But this is roughly where the 90-day, well, exactly where the 90-day extension on tariff ends. So these are two key areas. Obviously, the downward aspect of the stock market is fairly brutal. At the minute, we actually have entered into bear market territory, pushed back up, challenging, can we make it back to correction territory? And one of the funny things about this pivot point here is not only able to pivot, when markets are above here, this is a correction. This is a technical term, and using the maths of, like, you know, that up to then it was a correction. That was all it was when you hear people say correction. And then under here it was bear market, in terms of when all of the kind of the consensus out there amongst media and finance people and economists, when they talk about, oh, the market's having a correction, oh, it's entered a bear market, it's right here and it's divided at that pivot point. I don't think I need to say any more on the technical analysis on that front. I don't want to overwhelm people, but as you can see, markets have not made it out of the bear's toilet quite yet. Does the bear do poops in the woods? Yes. It does. It's in there. It's hungry. It's been hibernating. It's been hibernating for a couple of years, and then it came out raw, and it took the markets down to correction territory. Raw. It took them into bear market territory. And are we out of the woods yet? No, we're not. Not quite yet. We did get a request to take a look at ARK80, which is what we're going to do now. ARK80. Rocket companies. They do rockets, baby. Oh, po, 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 po. This, which is like a crown. It's a crown. This king's or queen's crown pattern that we've seen so often in the past. Did you know, here, by the way, do you want to know a bit of trivia from back in the day? Romans who took the wall first crown. When Romans were storming somewhere, they would award the person who was able to capture the enemy's walls this crown. And as you can see, it's a crown that's made from bricks. That's pretty cool, isn't it? They would be able to use that as a symbol throughout their lives. And as such, once when when your boy Africanus was attacking a place, I believe in Greece, he sent a couple of guys around the side. He tried attacking once, they got repelled, attacked again the same day, and they had to move all of their dudes over to the other walls to defend it at that side. And he sent a couple sent 500 or so people around the back to try and climb the walls, and two of them did it once, and they got up, and they were almost going to kill each other as well when they got to the top of the walls. Then afterwards, after they'd won the battle, because they both were so desperate to get the right to have got that crown. Whenever you got it, it gave you special rights and status in life. You were actually given like land and salary out of it, money, lots of money, loads of status, and you're considered to be part of the kind of the nobility. You'd earned nobility through gaining that crown, which actually incentivized soldiers to climb up those crazy ladders. One of them, a guy called Trivialist, was able to get up there. Of the two guys, one of them was a mercenary. He went back off to where he came from afterwards, but the one that was a Roman legionary, he was a centurion, managed to get up there and got the crown, made a good life of it, became a politician and so on. And actually then his grandson became a consul. And of course, if you're a consul, you're the 1/3 of the three most powerful men in Rome. So and that was all because his granddad had managed to seize the walls and get that crown. So, yeah, anyway, this has been great. Fantastic, victorious move up towards these high ends, but you definitely don't want to form the full crown picture and then end up having to descend back down the walls for a different form of glory. If it does break down below the prices of around about $10, then Rocket becomes less attractive as an investment. I'm not a financial advisor, nothing that I say is financial advice. But thanks so much to the person who has been donating just there. I can see that there was one from Bernard. Thanks so much for that. We've also had Devlin and Bobby. We'll take a look at those in a minute. $10 is a big area for this stock. If it flips that, it could pop all the way down the way. We don't want to be seeing that. The move up so far has been quite positive, very good. We've obviously actually had pretty much a 50% retrace from these highs to these lows. Golden pocket, in fact, even better as part of that, but it sits back down, testing the 236 frequently. It needs to stay above $12 to say that there's any sign of actually having a foothold in the here and now. Otherwise, it could drop down to 20% to test that $10 area. Prices at $12.90 just now. It does operate with a lot of volatility recently. All markets have. It is difficult. There's a lot of risk out there. You could be exposed to volatility that completely makes or breaks your position in the space of a day. Therefore, being aware of these larger levels is very much important. That should kind of be about there. And what you're looking to then afterwards, if it does push up, which it could do, would be a target of $20. Beyond that at the minute is a little bit kind of greedy, unless you see something changing in terms of this company's performance longer term. Just taking a quick look at its financials here. Had earnings today, done well, surprised by 620 million and generated a good bit of profit. I'd like to see the details of that. We're getting a dividend as well. Is that the first dividend from this company? That's a new thing, 80 cents, probably a yield on it. Okay, Rocket Company's shares fell Wednesday because challenges for mortgage leaders due to rising long-term bond yields. Okay, so they're exposed to interest rates and stuff as well. Be careful there if we do see any chat about recession stuff coming back in again. That might actually be a positive case for Rocket. And if we see that interest rates are going to stay high for longer, be careful for that too. That actually is the threat to them, perhaps, if they're highly leveraged. Thanks for all your hard work, says Bernard. Cheers, that's appreciated. Maybe given a glorious obvious thing, but why is the option market on LPSN super cheap now? Cheers, Robbie. Oh, Robbie, sorry. Cool, mate. Thanks for that. It's the options market there is fairly thin, and that means that there's not a massive amount of depth in the books. So it's orders with any size will eat up an awful lot of the books there, and it's not a massively traded company. So that's one of the reasons, and as well because of the just the situation, the stock price, the underlying stock price is low, and these are leveraged risky products if you're just exposed to them only. But if you are hedging, then of course you pay that for that premium to buy the insurance against your other risk. But if you are if you're looking to just be on them on alone, then there's a big risk. It's a big risk on options just on its own, and the high risk there kind of creates that risk reward dynamic. It's not just purely based on some Black-Scholes model, if that's kind of the core of the question there. I see TradeSpot actually answering that one in the chat there as well. There's various factors. Stock itself offers so much opportunity in shares alone. Yeah, exactly. The ability to maximize the chain means holding shares there is squeeze foundations are built on the shares held. Yeah, okay, so there's a load of dynamics at play right now with that one. But of course, great. Appreciate the super chat, man, and for the question. It's cool to see people chatting in the chat about that as well. Thanks so much to TradeSpawn for being a great support to me on this channel. Did I see your request? It was at the very beginning. Did you put in a request at the very beginning, Amanda, and I missed it? Let me just look back here. Oh, cool. I've also see what's your favorite way to short the VIX. I got some VIX in tens yesterday, but I wonder if there's better instruments for this. VIX has 4-hour flash up at 28.74. Cheers. Yeah. I often use derivative trading for shorting the VIX in the UK on spread, but it actually makes it very easy for me to do that. And that's my favorite one. When you're asking me what my favorite one is that just to be honest with you, man, but you can't do that in America, so it's not a very good answer. But there's plenty of good stuff. There's options on VIX as well if you want to do options. Any thoughts on LPSN? Yes, I saw that. But where was the one from? Thank you so much, by the way, for that XD. Amanda, I'm not seeing your blooming thing there, by the way. Oh, right. Okay, so let me just see if you can put the comment in the chat then, Amanda, then that'd be appreciated. Thanks very much for that. Just have a quick look and show you the US government bond yield. It's fair to say that there's a target up here towards that high percentage level. If things go poorly, that goes set back there in November 2023. It's a 4-hour chart. We're looking at 4.32 just there. Here's the 2 yield. 3.91 is as high as 4 earlier on. Obviously, if this were to go higher than the 10 yield, then you'd be looking at, when people talk about the yield, inverted yield curve, then if this, if in the way that I've got this laid out just now, if this red line were to go underneath the black one, then that would be like a big sort of recession warning, which is why during a long period of time here in 2023 and 2022 through to 2020, through to August of 2024, there was this issue, and that was made sense, because there was what was happening here was, I don't want to overwhelm people. What was happening here was that there was an expectation that interest rates might fall. If you remember back to those years, in the post-COVID years, and it didn't happen. inflation was stickier than expected, and so on, and it created this dynamic where people were worried about a recession possibly coming, and inflation was still high. So in this period of time, you might have heard the word stagflation, and that was the threat at that point. If it were to, not actually fix itself and stay like that for quite a while, then you wouldn't have any growth and you'd have this stagflation thing happening. And it has then subsequently fixed itself, but people are keeping an eye out for that coming back again. And we can see here on this chart that the bonds went down and perfectly filled in a flash target that they needed to satisfy. So the idea then that it could do the same thing on the top side on the US 10-year remains real. So you'd have to see how the actual inversion worked at that time to see if people were betting heavier on the forward leaning contracts, right? So that's an issue. I don't want to confuse anyone. Did you put your comment in there, Amanda? Then let me just check and see. Ugh. If anybody sees her in the chat, get her to post her thing before I tune out on today's show, so that I don't have to say it too often. Amanda, do your thing in there, right? Well, the situation there with regards to yield remains a question of confidence in the US currently, and that's why the regards to the news stories really at the minute, it's really interesting because you can just check mainstream headline news for your financial news, which is a really unusual situation to be in for people who normally, are having to go to find a source for news, can actually say, well, what's the thing that's affecting the headlines today? Boom, it's something like this. This is the uncertainty persisting after Trump's capitulation to markets is the comment. And you can see that actually a lot of what I've talked about here essentially today echoes this, which is good to see that the elite journalism is kind of saying similar stuff to me. I hadn't realized that. Uncertainty persists even after Trump's capitulation to markets. That's kind of like trying to wind them up there, perhaps. US stocks surged on Wednesday after Donald Trump backed off his plans to hit a huge swathe of trading partners with steep tariffs, but investors and analysts said uncertainty over duties would persist. And that does seem to be still part of the issue, right? So he's considered a pause on the tariffs. This is the chat about treasuries. Treasury sell-off deepens, safe haven status challenged. Okay, so investors are misfiring basis trades are piling. Investors say misfiring basis trades are piling pressure on US government bond market. The moves offer a new challenge to the Trump administration, which had previously cited lowering Treasury yields as a policy aim and could mark a loss of investor confidence in the world's largest sovereign debt market. The sell-off may be signaling a regime shift whereby Treasuries, US Treasuries, are no longer the global fixed income safe haven. And the issue here, if the strategy for the US actually is one of escalation, is that what happens is China sells off its US bonds, dumps its US currency, buys euros, buys euro bonds. The euros then flood the bond market with tons of bonds and puts it towards defense and growth and so on, kind of like it has been doing. And actually, when you think about China's plan for whether or not it can become the reserve currency and overtake the US's privileged position, first off, you have to think about the aims and goals of that. One of them has to recognize the current situation, and which is that China is a manufacturing powerhouse and is really taking one of its core competencies and niche wealth creation vehicles, its population, and really managed to put it to work. But in a transition towards a more middle class society, you could be looking at them wanting to eventually achieve that reserve currency status themselves. But America to China is just a flip the world is not ready for. However, China could support this move by bringing it towards the Europe zone first. There's a famous football team you might have heard of, football, soccer, called Barcelona, and for the longest time they never had any They never had any advertising on their strip. Then one year, in a move that shocked the world, they put UNICEF as a sponsor. But UNICEF is a charity. So the whole world looked at Barcelona and thought, oh, they're so great. They never had sponsors. And now that they have one, they're doing it for free for a charity. How cool. The savvy people watching on knew that it was just a matter of a year or so before they would take on an actual paid sponsor on their strip, which they did. They just needed to transition towards that, and they did it through that mechanism. The idea that the Chinese could do that is absolutely true. Sell-off may be signaling a regime shift there. The sell-off is the latest sign of investors moving out of low-risk assets and into cash. Major trading partners spark intense volatility. This highly unusual pattern suggests a generalized aversion to US assets in the global financial markets. We're being treated by global financial markets like a problematic emerging market. This is one of the big topic conversations over the last week, in fact, and it's been described, the US has been described as being like an emerging market, using tariffs and protectionism to grow its economy as opposed to a fully developed country. This has been something that's been talked about in terms of the difficulty about doing business with the US by major partners out there in the world, global economy. And it's not a disparaging thing of saying America's like a third world developing country. No. It's using tariffs the same way that Brazil uses tariffs. Or Argentina. These economies which have tried and so far done great work but not quite achieved wealthy status, America's acting like them, and it makes it very difficult to understand how it would be, because that's not how the rest of the world, in terms of like Britain, Europe and all that, operate. It's not obvious that the Fed needs to step in immediately, and it will remain not obvious, right, because that's not how it goes for the Fed. One of the other things I want to talk about, of course, in today's show, but there won't be time for it, is about how Trump is doing something which is kind of be considered to be like inverse Margaret Thatcher. Something, if you want to hear more about that, then let me know. We could talk about it. Inverse Margaret Thatcher. I did get a few comments in our last week's video asking me to make a video about LPSN's customer journey, and I have looked into that. There was not quite enough, though, from people to really let me know that it was something that would get the views and add that value. But I will, still try and do the work, because I want to deliver for people, as a good guy, just trying to help out. So I'll get on and do some work on that and see